Good morning. It is Wednesday, May 27th, 2026. This is your deep dive daily briefing. I am your anchor, delivering a comprehensive analysis of the pivotal events that have defined the last 24 hours. We begin our broadcast on the world stage, where the strategic landscape of the Middle East has encountered a sharp and volatile friction that threatens a fragile multi-week ceasefire. Overnight, the United States Central Command confirmed that American naval forces conducted a series of defensive precision strikes in southern Iran. According to military spokesman, the operation targeted specific land-based missile launch positions and maritime assets that were actively attempting to deploy sea mines near international shipping lanes. This kinetic engagement occurred just as top Iranian negotiators arrived in Doha for high-stakes peace talks, signaling maximum leverage maneuvers by both Washington and Tehran. The diplomatic environment has been further complicated by statements from Israeli Prime Minister Benjamin Netanyahu, who vowed to crush regional proxy forces in Lebanon, and social media posts from U.S. President Donald Trump, who reiterated demands that Iran hand over its entire inventory of enriched uranium to international witnesses for complete destruction as a baseline condition for any final peace treaty.
Transitioning from the theater of military conflict to the legislative chambers of the global economy, the world's major democracies are forging unprecedented economic alliances to insulate their domestic markets from state-level resource weaponization. In New Delhi, the foreign ministers of the Quad nations, representing Japan, Australia, India, and the United States, formally concluded a landmark summit focused on securing international industrial baselines. According to a joint declaration released late Tuesday, the four democracies have agreed to mobilize up to $20 billion in combined public and private sector capital to establish resilient supply chains for stable energy and critical mineral materials. This massive strategic initiative will fund cross-border mining, processing, and recycling networks across the alliance, aiming to break the global reliance on centralized mineral monopolies and secure the rare earth elements essential for advanced electronic component manufacturing.
This aggressive governmental push for critical raw materials occurs alongside a complex re-evaluation of household financial health across the world's largest consumer market. Data released on Tuesday by the Conference Board revealed that the United States Consumer Confidence Index edged downward in May, slipping to 93.1 as the persistent inflationary impacts of the multi-month Middle East conflict continue to stress household budgets. While the equity markets have staged a dramatic rally on tech sector momentum and hopes for an ultimate diplomatic resolution, nearly 50% of surveyed consumers state they expect interest rates to remain higher over the next 12 months. This defensive consumer appraisal has driven the domestic labor market and current business condition indicators moderately lower, forcing retail networks and consumer credit providers to adjust to an era of protracted fiscal caution as households flag elevated energy and transport costs as persistent threats to their financial well-being.
Turning our attention to the technology sector, the macroeconomic headwinds generated by these global price pressures are accelerating a fundamental transformation in how multinational corporations manage sovereign data assets and multi-jurisdictional compliance. As advanced digital economies expand cloud computing adoption and enterprise artificial intelligence deployment, technology transactions are increasingly evolving into core instruments of national security and regional market access. In a pioneering regulatory shift, Saudi Arabia is moving to enact its landmark Global AI Hub law, which officially operationalizes the concept of data embassies. This framework allows foreign entities to host sovereign data centers on Saudi territory under the complete legal framework of their home jurisdiction, rather than domestic Saudi law. This structural transformation in cross-border contracting represents a permanent departure from traditional public utilities, allowing technology providers to decouple their digital assets from foreign regulatory intervention and preserve operational continuity in an era of deepening geopolitical fragmentation.
Finally, we look at the logistics and global capital networks that serve as the vital arteries of international commerce, which are now absorbing the permanent structural adjustments of a capacity-constrained global trading system. On Wall Street, major equity benchmarks ticked closer to record highs on Tuesday, largely supported by a historic 18% surge in semiconductor memory providers like Micron Technology, which has tripled in value this year due to the insatiable hardware demand generated by the artificial intelligence data center supercycle. However, this capital market optimism contrasts sharply with the physical realities facing global shipping networks. Despite short-term fluctuations in crude oil prices, maritime carriers continue to operate under maximum deployment, with the long-term Cape of Good Hope detour remaining the default baseline for Asia to Europe trade lanes. Logistics professionals report that elevated maritime freight indices and prolonged transit times have permanently altered corporate inventory models, forcing global enterprises to permanently abandon the low-cost, just-in-time logistics frameworks of the previous decade in favor of high-cost regional resilience.
In summary, the global landscape is defined by defensive United States military strikes in southern Iran occurring just as negotiators convene in Doha, while the Quad nations mobilize $20 billion to secure critical mineral supply chains. U.S. consumer confidence has edged downward due to persistent energy-driven inflation, while Saudi Arabia pioneers the data embassy model for international AI hosting, and the global logistics sector relies on record semiconductor investments to sustain a high-cost, capacity-constrained maritime network. Based on the current data, I predict that the defensive military strikes executed by the United States in southern Iran indicate that the geopolitical risk premium on global energy and logistics will remain firmly locked in place throughout the summer of 2026. By executing kinetic operations while negotiators are on the ground in Doha, Washington has signaled that it will not tolerate a passive-aggressive closure of the Strait of Hormuz via sea mines. This military assertiveness, combined with the Quad's $20 billion mineral initiative, proves that the world's major economies are no longer waiting for a peaceful return to the old globalized order. Consequently, input costs will remain structurally elevated, making it mathematically improbable for the Federal Reserve to implement an interest rate cut anytime soon, and forcing corporate leaders to permanently treat high-cost logistics and regional data sovereign infrastructure as the basic baseline for international commerce.